Hi, I'm Keon, a Senior Research Analyst with Lipper. I'm here to speak to you about the fund flow activity for the week ended Wednesday, October 16th. We'll start this week's report by taking a quick look at the market activity. The equity markets appreciated sharply on the strength of optimism about the U.S.-China trade talks, as well as an upbeat start to corporate earnings season. For the fund flows trading week, the NASDAQ, the Dow, and the S&P 500 recorded gains of 2.8%, 2.5%, and 2.4% respectively. The trading week got off to a rousing start as all three indices captured the majority of their respective gains at the start of the week, thanks to a thaw in the U.S.-China trade war. The culmination of the trade talks came on Friday as it announced that an agreement had been reached that would ease trade tensions and would include the elimination of some of the planned tariffs. President Donald Trump labeled this a substantial Phase 1 deal, implying that there was more to come. Later in the week, the markets benefited from a strong start to the corporate earnings season for the third quarter, as better than expected results from the financial sector, specifically JP Morgan Chase, Wells Fargo, and Citigroup, carried the day. Let's focus our attention back now to the fund flows activity. We'll start by taking a quick look at our fund macro groups. For the week, equity mutual funds suffered net outflows of $6.8 billion. Taxable and muni bond funds took in $2.4 billion and $1.1 billion in net new money, respectively, while money market funds saw $5.6 billion leave. We'll now explore these changes in more detail with each one of the asset groups. We'll start with our equity mutual fund group. The $6.8 billion net negative flow was the 35th straight weekly net outflow for the group. Both domestic equity funds and non-domestic equity funds contributed to this week's net negative flows, with net outflows of $4.6 billion and $2.3 billion respectively. The largest net outflows among the regional peer groups belong to multi-cap core funds and international multi-cap growth funds, which had net outflows of $1.6 billion and $677 million respectively. Let's move on now to our equity ETF group. This asset group had net inflows of $10 billion last week, thanks to the SPDR S&P 500 ETF, the Invesco QQQ, and iShares Russell 2000 ETF, which had net inflows of $3.2 billion, $1.2 billion, and $1.1 billion respectively. The largest net outflow belonged to the Consumer Staples Select Sector SPDR ETF at approximately $740 million. Let's turn our attention now to taxable bond funds. We'll start with the mutual fund side of things. This group had net inflows of $2.4 billion for the week. The largest positive net flows among the peer groups belong to core plus bond funds and ultra short obligation funds, which grew their coffers by $758 million and $538 million respectively. Our next group to review is taxable bond ETFs. This group took in net new money of just about $3.9 billion for the week. The largest individual net inflows belong to the iShares iBoxx Dollar High Yield Corporate Bond ETF and the SPDR Bloomberg Barclays High Yield Bond ETF, which had positive net flows of $902 million and $649 million. The largest net outflow belonged to the iShares Short Treasury Bond product, which saw about $350 million leave their coffers. Let's take a closer look at the Muni Bond Fund Group now, which extended its run of weekly net inflows to 41 weeks. This asset group had positive net flows of $1.1 billion this week. The net inflows were once again concentrated within the national Muni peer groups, with general Muni debt funds and high-yield Muni debt funds leading the way, with net inflows of right around $500 million and $250 million respectively. Our last group to take a look at is money market funds. Money market funds, with net outflows of $5.6 billion, saw money leave for the first time in 7 weeks. The institutional U.S. government money market funds and institutional U.S. Treasury money market funds peer groups were responsible for all the net outflows, as they had net negative flows of $12.8 billion and $3.9 billion. The largest net inflows belong to the U.S. government money market funds group at $3.5 billion. This wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website at www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.